is ripping.
My tummy hurts. Pretty good, Brad Matt.
What in the pal is going on around here? What's going on, guys? Nick with Off the Chart Trading. I will be doing tonight's daily recap for November 30th. That is a Tuesday, if I'm not mistaken, and it is also the last day of the month, which is kind of crazy to think that we only have a month left of 2021. I wanted to start today. Obviously, doesn't take a rocket science to see that we were down a good amount into actually whenever Powell started speaking, that's why I titled it, what in the Powell's going on, mainly off of his comments that he's, I don't want to say completely doing a 180, but pretty darn close, saying that hey, maybe inflation's not completely transitory. And I was talking about in the room that personally I feel that the majority of the move we've seen over the last, I just say March lows, basically Powell coming in. You've seen the GIF of him with his money printer just going crazy, like rapid fire and stuff. And honestly, that could basically sum up the last year and a half of why I think we have moved the way we have. So for him to be printing money, very, QE, all that, trying to be as dovish as possible to help the market, to even, say one or two sentences that's kind of a different tone, I think puts a crack in the ice. Now, sometimes there's cracks in ices and it's fine. And then other times, or, crack in a glass and it's fine. It still works. It can still hold the water. But more times than not, one crack leads to others. And then obviously, either the ice breaks or the glass breaks or whatever analogy you want to use. So I was a little more, I don't want to say bearish, but just more cautious than usual. Normally I shrug off any type of liquidation break, anything that's, feels kind of heavy. Like, oh, this could be it. This is what we've been waiting for, is to see a legitimate pullback, and this is it. And you have that. But I wanted to start with the monthly chart because obviously since March lows, and that's why I love my color-coded candles. I should put that on a t-shirt, color-coded candles, CCC. It just paints the picture that we've been up. I mean, what color do you see more than any other color? I mean, there's literally, going back almost 2 years here, it's only one color that's been, outside of green. Well, technically these two, but you get what I'm saying. We only had the red, and guess what? That was March lows, which seems like so far away considering where we're at price-wise, which is kind of crazy. ES doubling from its lows. But my main point, other than it just being straight up, and I think we can thank Powell for that, is I'm looking at the ES, and obviously I'm doing this video. I think I'm doing it, what time is it? Like 8:40. So technically, this candle right here is for December. So realistically, we could do something like this. I think it's a little more dramatic when you do that. And one thing I wanted to point out is that's not a very good looking candle. I mean, last time we got something, you could say something like this isn't that great, but at least, as far as like the candle, the way it looks, I don't know, just it struck me as you're at the highs, and this one technically wasn't new highs. At the time, this would have been the new highs, and it was still holding the 8. Granted, we are still at the 8, but my point is, I'm at the all-time highs, and that pullback, I'm not a big fan of that. I don't like that candle, and I normally don't look at candles on the monthly, but that one did catch my attention, technically ending the month that way, that we hit highs and then we completely retreated and going out near the bottom of that candle. Once again, what we're looking at is each candle is 1 month. So yes, there is other candles, I think more of a doji than anything, but granted, after that's kind of where we ended up seeing some selling. I don't think we're going to see anything like this, but the other thing is how far we are from the 8 too. I mean, we've been pretty elevated, came back a little bit in September, which is, typically seasonal and not too crazy to have a bad September. I think that's almost like a self-fulfilling prophecy, and then a nice rebound. The other thing is, look at the momentum shift too on the squeeze. That's the first time basically since these lows that we're seeing that. And I'm not a doom and gloom kind of guy, and I'm not trying to say we're going to drop all the way down to 3,600 and yada, 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 but I think it's good to be aware of what, where you are in the markets, how far we've come, and just being safe, than sorry. And I've already had that mindset over the last couple months, realistically going back to, I think, March of this year, not March lows here. but kind of shifting how I trade. And I've been fairly conservative to begin with ever since March lows. Definitely risking a lot less than I used to. And I wouldn't consider myself an investor, but starting in March and April this year, I did start allocating capital to stocks that I liked. Very Kathy Woodish as far as growth and hyper growth and stuff like that. And to be honest, most of the time it hasn't worked. I've been lucky that 2 or 3 of my bigger holdings have worked quite well, like Lucid and EVgo and some of these other ones. But most of the other ones I'm down, which I'm fine because once again I have that long-term mindset, which has been, it's been helpful because I'm not really worried about where we're at today. If you're buying a stock and you're looking out 5 years, then why would you care what this 1 month candle does? You know what I mean? So that's kind of my outlook. Is I've been shifting a lot of capital to the stocks I like that have been beat down. I consider a discount. Black Friday, Cyber Monday, all that stuff just passed. If something's normally 100 and it's on sale for 50, that's a good discount. And some things are even cheaper. Some stocks I like, got up to 30, $40, and now here they are at 5 or 6. And nothing really fundamentally has changed with the companies. And I'll go over a couple. So I initiated some positions today, and I'll look at those and mention a few of those today. And some of them were added positions, but I don't mind switching through, and we can take a look at that. But I just wanted to show that candle, which I'm not going to get. I'm not, these nightly videos. I'm not going to break that down. Obviously, if any members are watching this and they want me to really go into why I'm not a huge fan of that, by all means, I can do that tomorrow in the room, or maybe bring it up for tomorrow's webinar with Brett. We can skim through looking at some of these other time frames. The weekly, also, the last 2 weeks. No, it's obviously it's live right now, but was just below its 8. So who's to say we don't come down to the 21? I mean, it's another 100 something points. So that's something to be aware of, that we could come down to the 21 on the weekly. I don't know. Like, I'm looking at the corner of my eye because I have 6 screens, and I'm looking at my internal screen, which is I have my futures up there, and everything's actually up pretty nice. NQ's rebounded. We're up about 100 points. ES is up about 22. So pretty nice rebound off the lows from today. But like I said, I just got out of some stuff today to be safe than sorry. Stuff that was either doing well last week and has been hit since Friday, recovered a little yesterday, and then got beat in the head again today. Like my Walmart trade, I mentioned that I think in a video. Which if anybody did take that trade, they probably did well if they weren't too greedy. I was driving down to visit family in Florida, so I pulled out my phone. I'm up like 70% on the trade. And I'm like, I'm just not gonna look at it. I'm on vacation mode, quote unquote, and I'll just let it play out. I didn't take profits. End up getting out today for a loss. I think I lost like 20% on that one, so I wasn't too thrilled with that. What's something else I got out of today? Snap, I was in that one, which I think I still have more time. I was good till February, but I just wanted to get back some of that capital. Most of them I was down, on that one I think I was down 50%. And even though I'm fine losing the entire debit paid for the options, if I don't have to lose the money, I'd rather get it back. I don't care if it's 30%, 40%, 80%, that's irrelevant. The longer you trade, you kind of detach yourself from the monetary, purchasing power and all that type of stuff. So I'm not too worried how much money I'm losing because I already defined that each and every trade before I take it. So for me, that was one of my aha moments, was just being comfortable, not worrying about how much you lose. Or, obviously when you're new to trading, you just focus on how much money you're going to make. You're going to take this trade and you're going to make X amount and live happily ever after. And then obviously reality sets in, and hopefully you, I call them crossroads or inflection points you get to, that you kind of make the right decision to kind of right the ship of your trading. But anyway, not to go off on a tangent because I can definitely do that. I just wanted to show that and kind of mention some of those other things. One thing I did do, and I probably could have been a little more active. We can actually look at the daily too. The daily's not looking too hot, flirting around the 34. Maybe we come down to the 50. I'm just noticing, even though that's not I don't really consider 2-dot squeezes valid, but that might actually be the first daily squeeze firing short in the ES in like a year plus, at least a year and change, maybe like 15, 16, 17 months. So that is noteworthy to keep an eye on, that would be the first one. Because I've used that before, like every single daily squeeze has fired long. That technically is a squeeze, and it is technically at this moment in time. Granted, this candle won't end until tomorrow afternoon, late afternoon. So, it could have a big green day tomorrow, and that might end up going back in. But that is something to be aware of. So main thing from what you're looking at is just be cautious. Know what you own. If you have directional options, specifically calls that expire in December, if you're up, maybe take profits. If you're down, you may be getting some of the premium back. Obviously, I'm not a financial advisor, so I can't tell you what to do with your own money. But these are just more, hey, this is what I'm doing, this is what I'm looking at, and this is what I'm personally doing to make sure I'm not blindsided, because it's always why it was so obvious. The squeeze fired short. Why the ES is down 300 points from here. Why didn't I go short, or why didn't I ratchet up stops and yada yada yada. So try to be, I guess, proactive as possible. One thing today, obviously, NQ got hit pretty hard, and I thought it would, because mainly if they are going to raise rates earlier, typically tech, growth stocks, all that stuff's going to get hit pretty hard. But the VIX, the cumulative tick, I was talking about this last week too. The breadth ratios, they weren't anywhere near as negative, but I was talking about that, if you guys watch the videos on the regular, that we had days, not as this aggressive into the close, but we had like 3 or 4 days like that, and I was talking about it, like under the hood, it looked like, not that we were running out of gas, but there was some weakness, and the news is always going to pin what should happen regardless. It's COVID, it's Powell's comments, it's, I don't know, Spain doing something, or North Korea shooting a missile. There's always something. Me saying this, you'll probably notice it. You wake up, especially if you have CNBC as an app or any of these other ones. You check your phone whenever you wake up, 6, 7, 8 o'clock in the morning. Dow futures down 400, and there's always a reason below it. It's not just because the market's down. It's because of COVID fears. What is it, Optimus Prime or Omicron Persei 8 or whatever the new variant is. There's always a direct, they take what's going on in the markets and they directly attach it to something. So just, it's funny how that works sometimes. Granted, it's valid. Powell's comments are literally why we had that drop. But we are rebounding a bit here, late afternoon. I shouldn't say late afternoon, late after hours here. So, and squeezes are setting up. These are 15-minute charts. So we'll have to see. A lot can happen over the next, 12 hours before we open. But I guess it's promising. I do have a Q put trade on, because I noticed that one got hit the hardest, and was looking for some potential follow through into tomorrow, mainly as a hedge. When you got 70 positions, why not have 1 or 2 that are, I guess, bearish, or just to have protection to the downside. There's really nothing else. The advanced declines, I made a comment about that on the S&P, trading sideways and then kind of puking into the close. You had 98% of the stocks in the S&P red on the day. So that is a good amount. Trend did close above 2, so that is something to pay attention to. Put call ratio, not as high as I would want it. If this was like, 0.9 or 1 or something, and this was 2.5 or something along those lines, then I'd say maybe, we could see a nice rebound tomorrow. Not that we won't see one, but, there's the more points of reference you can use to formulate an idea that can also become a trade, and then you work from that. It's almost like a majority rule. I always think of like a mental scale when I'm looking at this stuff, and I'm just like, I think we go higher because of whatever. And then I look and I see, the VIX is creeping up, cumulative tick is dying, the vol spreads, breadth ratios, advanced declines, the trend, the put call, the ticks, whatever you want to, you look at 7, 8, 9 things, and if 8 of them or 7 of them are telling you, no, it doesn't look like we're going to head higher, then there's a divergence, and it's something to pay attention to. That's why I think it's so important to be multi-layered with the way you think and you process information, because if you just look at price action, everything looks good right now. And obviously these are closed because it's after hours, but you get the idea. You just look, the ES is up 25 points. Doesn't really mean anything. Like, obviously my 3-year-old can look and I can say, hey, what number is that? 25. I don't know if he can count to 25. I think it's like we're struggling around 15, but regardless, you get the idea that, you can just point and see green and you can say the number, and there's a lot more that equates to that. So I think it's important to use something along these lines, or at least take little bits and pieces. One thing I want to show, and this will be worth the cost of admission on the YouTubes today. I call it the tick trade. It's basically an extreme, and I never consider the first opening, like this one was negative 1600. I don't count that. This was positive, 1400 today. I don't count that. Actually, no, that was Monday. I don't count the extremes in the first 15 minutes. Specifically, the first tick of the day will always be the extreme. Not always, but majority of the time, it will be the extreme, especially if there's a gap up or gap down, which we gapped down and then we gapped up, and you can see those extremes. So I don't really put too much attention into the first, the first 5 minutes, the first couple minutes of the morning, but I will say when you get extremes, it's not sustainable. So when you get to negative 1,000, specifically more than that, like negative 1,200, negative 1,300, negative 1,400, and it's intraday, and it's 10 o'clock in the morning, 11, 12, 1 o'clock, whatever time, those are extreme moves one way or the other. So what I call the tick trade is just an extreme move one way or the other when it comes to the ticks. And obviously, once again, it's a nightly recap. I'm not going to deep dive into what the ticks are. I talk about it in my internal video on our website. For members, you have access to it. But I really recommend you guys adding this to your workspace and keeping an eye on the tick. I consider it the heartbeat of the markets. And if there's one thing, if you ever get away from, any takeaway that could potentially make you a better trader, is to keep an eye on the ticks. I don't know if it's the money sign tick on E-Trade. I know not every single broker has it, but this is Thinkorswim, and that's what it is on Thinkorswim. If you're not 100% sure your broker has that when you type it in, then it might be best to either Google it real quick and type in your broker, or reach out to your broker, whether it be, I guess, email, message, or call, and say, hey, the New York Stock Exchange tick, do we have that on this platform? Yes or no. If not, you can always open up a TOS account for free. I think if I don't even think you need to put a deposit now. I think you just activate the live data. If not, what's $200-300? Sometimes it's good to have multiple brokers just in case one's not working. But anyway, main thing for today. I personally played the rebound today on the NQ when we got the negative. What was it, like 1,400? Something crazy. When I saw that, I'm like, all right, that's a bit much. And I actually ended up playing the reversal. And I mentioned in the room. Once we got that negative tick, I'm like, all right, wait for it, and I know at least 1 or 2 people took this trade with me. And sometimes they're quick. If you're not familiar, you're not in the room, or not familiar with the lingo and how I look at things, some of that, I don't have the time, especially during the day when we are getting those negative ticks, or the market is, falling or going higher or whatever. It's hard to break it down live. That's why it's good to have everything recorded, because people can come back and watch it, and then obviously pick the pieces that work for them. But the main point is, when you get extremes like this, like negative, like I said, like 1,400 or whatever it was, whether that's plus or negative, it's safe to say if you do the reversal of that move within a minute or two, you're going to see a pop or a drop. So if you had like a massive pop like this, let's just say this was flipped today, if you had plus 1,400 ticks somewhere during the day, chances are you're going to have a little pullback. Doesn't mean that's massive. I mean, and when you hear pullback, for some people, if they're futures traders, that might be 3 points. For somebody that's new, they hear pullback, that might mean 100 points. So when I say pullback, I just mean a pullback from whatever the current price is. That could be 3 points, 5 points, 10 points. It's irrelevant. It's just the opposite direction, because you're getting to an extreme. So I actually took a NQ long position once. It was about maybe 10-15 seconds after that tick, and I was down about $70-80, and then it did pop. And at one point I was up, I think, $300 something. It was moving so quick because shorts covering or new money entering or whatever the case may be that causes that type of move higher. Once again, the extreme, the opposite direction. I just market it in on a one lot. I typically only trade a one lot on the futures account. Like I said, I was up like 300, 350. It was moving so quick that once the trade works for me, I exit out of my bracket order, and I just right click somewhere on the screen, and it just it did end up coming back down pretty quick, and I made a quick $200. And once again, that's on a one lot, trading the NQ, nothing fancy. I use Infinity Futures, so it's fairly inexpensive, and you don't need a big account to trade that. But my point is, you wait for a move like that. It doesn't always happen, but I don't know a single person that's watching this, or anybody in it doesn't matter what type of money you make. I don't know many people that will make, $200 in not even probably 15 seconds, 20 seconds or whatever, or especially if you're starting out, that's good money. And like I said, that's normally not what you want to focus on, those YouTube videos that are, those ads or whatever. Click the link below and watch this, tutorial, and then you pay for our classes. And I'm not saying anything like that, but typically that's what people fall for, is the quick money. And you can make quick money in trading. It just doesn't typically come easy, and it comes from experience and, trial and error. But I just wanted to show that, because when you do see extremes, and it's not a specific number, it's basically, you have these, and we didn't really see, and towards the end of the day, we did see a plus 1,000, which is probably shorts covering into the last 15 minutes of the day. But when you have this, I mean, granted, we stayed under pressure. You can see we had multiple ones break below 1,000. But when you have that extreme, whether it be this one or this one, if you can play that, then there's a good chance that you end up catching that bounce. It doesn't always work, but in extreme moves, you'll typically get the buy alert, or the opposite will happen. So maybe you didn't know about that. That's just a little, I guess, nugget, if you will, that I'll give you guys tonight, a gold nugget, that when you watch the ticks, you can see the extreme. And if you do end up fading the opposite direction, whether it's rocketing higher off of whatever news, and you get that plus 1,200, plus 1,300, chances are, if you sell that, whether obviously if you're long, you sell into that strength, or you want to initiate a short position that's quick to play the opposite, chances are, and keep an eye on this next time it happens, you see plus 1,200, plus 1,300, an extreme move, chances are if you did do the opposite of that move, whether it be go long down here or go short here, you'll end up doing fairly well. Not 8 out of 10 times, 7 out of 10, whatever. I haven't back tested it, but I will say the vast majority of the time that I personally do this trade, it does end up working. And yeah, I could have done a 2 lot, 3 lot, whatever, and made X amount, but I'm happy with, I have the futures account as a separate broker. It's nice to just have it running, and if I see a trade, click a button or two and make that. I made $200 today, made like 190 or 200 yesterday. Like I said, I base hit. I'm happy. I never need to get a home run when it comes to any trade, specifically futures trading, because trust me, that consistent $100, $200, $300, ends up doing really well. And the other thing is too, once again, not to make this another 90-minute video or anything crazy, is I normally am one and done. As soon as I took that trade, I was done for the day. I was not going to take another futures trade. One, nothing's more frustrating than have the perfect setup. You make money, you follow the plan from A to Z, and then you somehow end up giving it back, or you end up not making as much, or you go red on the day, and then you kick yourself because it's like, well, shoot, I should have just been content. I should have been happy with that first trade. This is another thing to pay attention to. Most of the time, your first trade or second trade of the day, doesn't matter if it's at 9:30 in the morning, 11, 12, maybe it's 3:30, whatever the case may be. Your first trade or second trade is typically going to be your best of the day because you're balanced. You don't have that, I need to hit my goal, another, $50, or, oh man, the last 3 trades haven't worked. I need to make sure this one does. You come in balance for the day, especially if you're actively day trading. You'll notice that most of the time, your first or second trade are your best trades of the day. So if I did follow a plan, took a trade, it worked instantly, and I'm happy with the amount I made, whatever that is for you, then just call it a day. Exit out of the platform, take the rest of the day off, or just be content just sitting on your hands, because that is what makes you either a trader or a gambler. Is if you feel the itch to take another trade, you're gambling, you're over trading. And it's a very thin line when it comes to that type of mindset. And honestly, the discipline is what keeps you on the trader side versus the gambling. Because if you just want to keep hitting that buy button or that sell button, or come on, and look how fast I made 200. Imagine what I can do in 20 minutes. That type of mindset is typically the death of a trader, and it's very hard for the average person to overcome that mindset. But anyway, if you don't use this, I recommend this. If you see the extremes, maybe try it on a paper account first, and just to see how it goes. Like I said, this is all personal, how I trade and what I look for and what I personally do. Can't stress that enough. So obviously, if it helps, great. If not, just maybe you got the idea of keeping an eye on the ticks. Like I said, I consider it, your finger to your wrist. It's the heartbeat of the market, and it's something I use along with all these tools that end up, working for me. I did mention I was going to actually probably end it there. I think this is probably a decent area, but I did mention I would go over some stuff I did buy today. Like I said, I did end up getting out of some of those options trades because they're shorter term. They expire in January or December, and with how the market acting and off that news, I just didn't want to hold them, especially since they were getting beat down since Friday, some of them, and then Monday, and then on and off from there. But anyway, let me look at some of these. I did initiate a position in here today. Like I said, I don't want to make these 2-hour videos, so by all means, if you're a member, you can read why I got in or ask me directly on Slack. But I figured I like, even though it could go below 9, could go to 8, could go to 6, could go to whatever. But when I look at a stock and I see the highs and the lows, and I'm near the lows, and it's something that I don't mind putting my money into, like I said, gaming, esports, all that kind of stuff, I like the idea, and I've had an eye on this one, but it's kind of, as you can see, consolidated and just traded between $18 to $20 forever. So after this most recent earnings, it had a drop, They lost a little more, and that's fine. Like I said, growth stocks and stuff like that. If your idea of holding something is a couple years, and it doesn't even have to be a couple years. Let's just say the stock had some buyout or some craziness, and the stock went to $50 tomorrow. Yeah, you better believe I'm either going to get out completely or leg out of the position on the way up. And like I said, it's a starter position because this thing could be at $6 tomorrow or next week or next year. So I end up starting a starter position today. But once again, take the ticker, look at it, see if it's something that works for you. You don't have to invest in it, but sometimes when things are beat up, kind of like that tick example, eventually they will start going up, and vice versa. Vice versa, when things are up every single day, they will have a red day. It's not if, it's when. So that's something to pay attention to. I've already been in this one for a while, ever since I found out that they were going to be taken public. I think I started buying all the way back in like July or June, somewhere in here. Obviously, you're not really doing anything when it's a SPAC. When it first got announced, I think it shot up to like 16 or so, came back down, and it was consolidating around $10 forever. But Lilium, I think, today hit 52-week lows. These are the eVTOL, whatever, the vertical takeoff. That basically think of EV drones that will take people around from city to city and so forth. So I think that's going to revolutionize transportation. It might. I mean, most of these companies say they're not going to be up and running in the sense of having, that you and me and everybody else can get into and actually go from one place to another till the earliest about 2024, 2025. Not something that you need to run into right now. I'm not expecting good earnings. I'm not expecting anything. I think for this particular one, the CEO is the ex-CEO of Airbus. So, and there's a lot of people backing this company up. It's my favorite Lilium out of all of them. But between, was it Joby or Archer, I'm invested in all of them. But I did add today because it is at a 52-week low. I talked about it too. There's not much of a reason to buy them right now because they're not doing anything. It's just, if I told you, hey, I'm not going to open a business for 5 years, most people aren't going to potentially invest in it until the business is already up and running because they want to show it. But I will say, most of the time, when you invest when it doesn't seem that good, that risk reward, that's typically when you'll end up having the best returns. Not every single trade will work that way, but majority of them, if you end up following a sector or an idea or technology and you're patient, it ends up paying off. So Lilium at a 52-week low, actually all-time low, I think is a decent one to take a look at. What was the other one? I added to I'm big into future growth. Anything that excites me or I think is cool, I don't mind investing because if I don't like it, why would I invest in it? So this is another space-related one. They actually ended up doing real. What caused this one to drop? I think they did 2 offerings back to back. Like it was like on a Monday and then a Tuesday or Thursday and Friday, whatever it was. It was like back to back. It was a double negative. I don't think their earnings were too hot either. No, so it's like a double negative. And here you are hitting a fresh 52-week all-time low. So once again, a stock that shot up to $19 because of what it can do and what it will do and launching things and so forth to a 52-week low. Once again, maybe it becomes a $2 stock. Maybe it stays under $5 for 5 years. I don't know, but that's just where I'm putting my money because I think, a lot of the space related stuff, I'm invested in Rocket, Astra, all those types of names because I like to think what is going to be big over the next 5 or 10 years. I don't want to put money in Apple. I don't want to put money in Amazon. I don't want to put money in Netflix. Those have already run. Those are the disclaimers for websites. We were in NVIDIA. I had NVIDIA at $11. Maybe we should run with that. And AMD at $2 and all these other stocks. But they hold on to those for 5-10 years and they do really well. And then they always say, this is the next one or whatever the case may be. I'd rather try to find the next, big thing rather than trying to put money into something that's already run 50,000% in the last 10 years. That's just me. I think I'll have a better return if this goes to 8 than, Amazon going to 7,000 or whatever it would have to do to double. So something also to keep an eye on. This one I've had my eye on. I played the stock as a trade years ago, even back, I think it was around its IPO when it first started breaking out. It actually was a pretty decent options trade a couple of years ago, and it's just been beat up ever since. I like this one mainly, once again, Aunt Kathy's in it. You got Uncle Buffett in here. I think Warren Buffett owns like 10 or 12% of the company. So you got a mix that normally don't, end up being at the same table, if I'm not mistaken. Both of them in it. And here you are hitting, once again today, an all-time low. Even going back, the stock's been public for a couple years now. And that's just how I look at things. Where was it and where is it now? And that might not be the best, thing for somebody that's like, well, it could go to 10, and it absolutely could. I started mentioning going long this stock at 17 like 2-3 days ago, but I'm mentioning that I did add to it today, and maybe this isn't one that's on your radar. So sometimes it's a matter of just taking the ticker and making it your own, and maybe this is something you add to your watch list, and maybe it's a $10 stock in 2 months. You buy it, and then maybe it goes go back up to 90 or 100 or whatever the case may be. And once again, don't have the time to go into each and every one, but take the ticker and take the time to do your own due diligence and see if it's one to play. Funny enough, this is one that we played off a high compression squeeze on the daily when the room started about a little over a year ago, and we actually did pretty well. This is when it was like an $18 stock. Funny enough, it's back to 17. Had a really nice run into last year, and this is another Kathy Wood one that I also like as well. What do you know? 52-week lows. I guess what was that today? Yeah. So I added to this one as well. I got under $17 today. Maybe it goes lower. It doesn't look like the best, but once again, with a 5 to 10 year outlook on a lot of this stuff, I'd rather just, once again, looking at a chart like this, where would you want to buy? Obviously you could say $4.35 and sell it at 61.59 and do a lot of hindsight trading, but real traders, people that actually interact with the markets and don't just highlight certain things, don't have that information. Maybe in 5 months we'll look at the stock and it's at $100, or maybe it's $5. Who knows? But when I look at these types of things, and I started buying this, I think once it breached under $20, so that's what I've been doing. Just one that I've been adding to. Not a new position. Once again, just adding to it. And then I like WeWork. This one, once the merger, it felt like it took forever for this thing to merge. Because I've been in it since it was BOX or whatever. I got back in, I think, May or June or something. I can't remember. It might have been all the way over here, too, beginning of the year. Because it did run, I think, when it was announced, and then it kind of fizzled out. Yeah, I might have been in this thing since March or April. This is crazy. Normally I don't hold stuff that long, but obviously changing how I trade and balance stuff out. Definitely going to try to hold longer term. So I think it hit 52 week was, or all time I should say, was about a week and a half ago. But here it is under $9. This one, WeWork, I'm sure you guys know, was supposed to go public, I think, like 2 years ago, a year and a half ago, and then COVID, and then there was some other stuff in China, and this and that, and the valuation fell apart. And anyway, I think that was also potentially a good thing for an investor now, because if everything did go, swimmingly, then the stock might be at $50-$60. So I prefer when these things don't have the best release and the best launch, because it gives you the opportunity to buy it at a cheaper price. Some people go, I don't want to touch it. It's near its all-time low. Well, as somebody who even as a trader, you try to buy as cheap as you can. That's like investing 101, is that you want to see a return on your investment regardless of what it is. You're going to buy at this price. You want it to go higher. So realistically speaking, buying it as cheap as possible is always the best thing. But it's funny, people don't want to buy it when it looks like this. They want to chase it when it's up here. I find that funny. And it's mainly retail investors that do that, or retail traders, not really investors. But anyway, WeWork, I think a lot of companies are going to, my wife, her company is selling their main headquarters in Chicago, whatever. We're talking about that recently. And she works for a Fortune 500 company. A lot of companies are, going remote, but there might be a meeting or something that needs to happen. And what WeWork does is they rent the spaces. So, why would a major company pay, we'll just say, millions of dollars a year, if not more, for either leasing or their own buildings if they don't need them anymore, but occasionally, maybe once a month or once a year or quarterly, they need to meet up. Well, that's where WeWork comes in. It'd be a lot cheaper to rent the space for a day than it would be to have your own facility. So all these companies saving money on the back end that way, I could see WeWork doing really well in the future, because that's where people would go. Granted, not the best start. I know their revenues got hit. Once again, COVID, probably the worst time to try to do anything as far as going public, because they pulled that and all the other stuff going on with COVID. But once again, if you can buy it at $8-9 and hold for 5 or 10 years, then, maybe it doesn't have to be 5 years. Maybe it can be 5 weeks. Maybe the stock's a $20 stock in a matter of a couple weeks. You never know. But I always like to buy at a price that I think is justified and go from there. Last but not least, I mentioned this earlier. I did add to this one as well. I think it's Joby. I don't know. I always say the two because I'm not sure which one it is. But regardless, it's the same exact idea as Lilium. And I'm a big fan. I don't know which one will be the number one. I'll personally rate them as, this is my number 2, Lilium's number 1 in my list, and Archer is number 3. That's how I personally rank them. And maybe it will play out that way because I think actually no, I'm still about even. I have about 500 to 700 shares of each of these and slowly been nibbling. Like I said, there's no rush for these stocks. They might continue to drop because there's no reason. Then anybody putting their money into this now will not see a return for a couple years. So when that happens, retail traders, and there might be FUD, there might be, oh, these are scams, they'll never do anything, and the stock gets hit. So I'm not saying to rush into it, but if you can buy at all-time lows, doesn't mean it's not going to go lower, but it is something to potentially pay attention to. So anyway, hopefully some of these tickers or the tick trade or just overall an idea where the market is right now, I think might be helpful. If it is, by all means, check out our site. Maybe let me see. Do that off screen real quick. Let me see. Just to show you guys. You can go to our site. It's the first thing that pops up. Black Friday. Learn more. Boom. You can join for the whole month. Whenever you join would be for a full month of the site. So between the workspaces and our recordings and the live room and everything, I'd be shocked if you didn't see value at $25 for a whole month. So by all means, come check us out. I don't think 25. You probably pay more. They always go to coffee. You pay that in 3 days at Starbucks. Don't get Starbucks for 3 days and come chill with us for a month. I think you might find some useful information, or at least watch a recording on something you don't know about. Or by all means, take my workspace. We don't charge for that stuff. We don't nickel and dime members. Every site I've ever been a part of, or every site I've ever seen, always has paywalls. Or, oh, you need more help? Sure, I'll help you on Friday afternoon for $1,000 for an hour. We don't do that. So by all means, come check us out. I think you'll like us, and if you like us, you can always sign up. If not, well, hopefully you got your money's worth, like I said, through the other things that we offer. On that, I'll end the recording. You guys have a great night, and I will catch you at the next one.